In this video, I'm gonna tell you guys all about a SPAC stock that I think has a huge upside potential over the next 10 years and yet to be discovered by the crowd yet. I mean, I was already kinda convinced with this SPAC, and as I did more and more research on this SPAC stock, what I found is this SPAC is going to be a real steal at these current prices. If you are pretty familiar with SPACs already, you might want to skip ahead to my full bullish thesis segment because I'm going to first introduce a little bit on what SPACs are all about. Otherwise, you probably wouldn't even understand what you'll be getting your hands into. I promise it's gonna be a little less than a minute, but anyway, I have attached the timestamp in the description box below for those of you guys who might want to skip ahead to save that 1 minute. Okay, so here in 2020, two of the hottest trends have been EVs and SPACs. SPACs is formed strictly to raise capital through an IPO for the sole purpose of acquiring an existing company. SPACs are often referred to as blank check companies because investors buy shares and fund the company on the belief that management will make a smart deal that returns a huge profit. Among a few most prominent SPACs making huge waves within the investing crowds are Virgin Galactic Holdings, Nikola, DraftKings, and so on. I mean, these are quite some popular stocks, especially among the Robinhood crowds. We are talking about massive investment in SPAC with nearly $36.2 billion in SPAC gross proceeds so far this year in 2020, far higher than the $13.6 billion in SPAC proceeds in 2019 and the $10.8 billion in 2018. This SPAC fest is nothing like Wall Street has ever seen. Like, that's actually more than double from 2019. So the question is, why are people hot for SPACs? Well, long story short, one is investors raising SPAC funds get about 20% of the SPAC just to run it, and oftentimes only have to put less than 5% of their money. 2. Private companies can avoid the long IPO process and go public by dealing with one single entity. 3. Investors get access to higher risk companies that would otherwise not go public via the IPO process. 4. Most importantly, we are in the middle of a pandemic and election year, which means bad economy, and therefore there was less incentive for companies to take on the risk by going public. So when all things are considered, all of a sudden SPAC starts to look very attractive, and hence that's the reason why we are seeing SPACs popping up like crazy. Now, just because SPAC stock starts to look very attractive doesn't mean you should get overexcited and invest in every new SPAC stock you see, because the thing is, not every SPAC stock has been proven to be a winner. That's an amateur mistake, okay? In fact, did you know that of the 89 SPAC that have completed the mergers, only 26 of the SPACs in that group had positive returns? And that's why it is extremely important for us to pick the right SPAC stock to invest in. I hereby introduce to you Desktop Metal that's expected to go public in the 4th quarter through a merger with Trine Acquisition Corporation under the ticker symbol TRNE. The combined operating company will be renamed to Desktop Metal under the ticker symbol DM and will continue to be listed under the New York Stock Exchange. As for now, if you want to invest, look for the ticker symbol TRNE. Knowing what we know now, a few questions immediately appeared in my head, like who is Desktop Metal and what is its core strategy for profitability? Is this the kind of stock that I can see disrupting the market in the next 10 years? Who are some of its competitors in the market, and what are the market advantages of this company? So these are the kind of questions that we need to ask ourselves, and one I'll be addressing later in this video. So basically, I'm sharing and giving everything there are out there about this company. Let's get to it. Zooming straight to the point, what do Desktop Metal do? Like I said before, Desktop Metal is a technology unicorn company that designs and specializes in metal 3D printing, providing mass production and turnkey additive manufacturing 2.0 era solutions. Desktop Metal is currently valued at $1.83 billion of the total $2.5 billion SPAC price. In the post-merger transaction, Desktop Metal will receive $575 million, $300 million from cash and TRNE Stock, and $275 million from private investment in public equity, including Miller Value Partners, XN, Shemav, and HPS Investment Partners at $10 per share. This merger will see Desktop Metal with estimated $625 million on balance sheet. I think that it will be enough for the company to sustain for a long time, as well as initializing its aggressive acquisition strategy to maintain its current lead in additive manufacturing 2.0. Desktop Metal existing shareholder will hold about 74% of the company, while the rest of the percentage goes to its other investors. Desktop Metal currently offers 4 products, ranging from the fiber industrial grade composites printers that uses automated fiber placement to studio system, shop system, and production system for scale of small to larger manufacturing. Today, Desktop Metal has over 600 customers in 60 countries using these products, from automotive industry like Ford, BMW, Toyota, GM, to blue chip companies like Google, Medtronic, US Army, and so on. Guys, think about it, this is just the tip of the iceberg, and I expect more manufacturing companies to follow suit in this 3D printing trend. Next, let's talk about Desktop Metal business model and market advantage. When you consider growth stocks like this, right, it needs to have a compelling business model. It's the one most crucial thing when it comes to investing. The awesome thing about Desktop Metal is they are the first of its kind in the 3D printing space to make additive manufacturing a major deal with their business model, because their 3D printing technology can create an on-demand ecosystem that can increasingly make anything with wide range of materials, methods, accuracy, and quantity. In other words, the company is addressing the unmet challenges of speed, cost, and quality to make metal 3D printing an essential tool for engineers and manufacturers around the world. In many ways, I see Desktop Metal as the future of manufacturing for many industries because of its cutting-edge development in additive manufacturing technology and well-funded position of $600 million in cash for further development. I mean, the facts are out there, right? Because we have big massive company investing in Desktop Metal that included everyone from Ford Motor, BMW to GE, Google, and Xratios that seems to agree. See, back then, the first wave of 3D printing in 2011 was filled with hypes that are said to actually replace traditional manufacturing. Boy, did it fail to uphold the traditional manufacturing, with multiple serious issues in 3D printing such as slow printing speed and limited selections of materials. Then, investors suddenly woke up and realized that 3D printing is just a marketing gimmick that's far from putting injection molding out of business. Now, this is where Desktop Metal comes in with its additive manufacturing 2.0. In the 2.0 era, we are actually witnessing tools and machineries actually being replaced by printers, with Desktop Metal going up by almost 100 times than the speed of legacy technology, making it single pass jetting the fastest 3D printing platform available in the market. Simply put, the 1.0 era technology is focused more towards the sole purpose of prototyping, whereas you have the 2.0 era that can actually seamlessly go from producing one-offs to hundreds of parts per day, and that in turn will cut costs and bring in more revenue. So just to give you guys a rough idea, with conventional and additive manufacturing 1.0, the manufacturing output is at 100s of units compared at the same time with additive manufacturing 2.0 the output is at 100,000 of units. If we go by Waller's report, experts seem to believe that additive manufacturing will change the global supply chain and expand by more than 12 times over the next 10 periods by 2030. And also don't forget that aside from selling a whole unit system, for every single time Desktop Metal sells a unit to manufacturers for mass production, it is setting the path for long-term recurring revenue stream as well. A shop system can potentially generate around 80 grand annually in consumables and services at around 60% gross margin. We also have a production system that can generate around 450 grand annually in consumables and services at around 70% gross margin. It's like how your house printer or car needs a refill every single time you empty its tank or cartridge. The way I see it, I think it's highly plausible for additive manufacturing 2.0 to reach the large scale of compound annual growth rate because of the aftermath of the coronavirus pandemic. I mean, American jobs has already lost approximately 750,000 jobs in the manufacturing sector, and we are seeing more and more American companies shifting their manufacturing away in search for cheaper labor and manufacturing costs. So if you ask me what are some ways to shift manufacturing jobs back to the US, well, there goes your answer. Additive manufacturing 2.0. Can I see this technology disrupting the market over the next 10 years? Yes. Compelling business model, check. Great competitive advantage, check. That's why I'm investing in this stock. Alright, before I end this video, I want to remind you all that there are indeed risks when it comes to investing in growth stocks like this. Like every company, it's just a matter if you truly believe in this 3D printing technology because it may or may not truly replace traditional manufacturing. And knowing growth stock like Desktop Metal, I have no doubt that the company will further dilute its shareholder in order for further expansion to remain competitive in its 3D printing space. Hopefully you guys enjoyed this video. As always, please still do your own due diligence. Remember to subscribe and hit the thumbs up button if you liked the video. It will help my channel to grow massively. Till next time.